All right, so are you ready to jump into another deep dive with us today?
Always excited to dig into a new company.
Perfect. Well, today we're going to be looking at Exact Sciences.
That's EXAS if you're following along on your brokerage app.
Exactly. And, we had a listener write in and ask us
Oh, yeah.
if XEDS would be the kind of company that Warren Buffett would invest in.
Yeah. Interesting question.
So we're going to take a look at all the sources our listener sent in, the
Yep.
company reports and the financials, all that good stuff.
Yep.
And try to answer that very question for them.
Sounds good.
So I guess first things first, what does Exact Sciences actually do?
Yeah, so they're involved in a couple of different areas of healthcare.
Okay.
They have a screening segment, and they also have a precision oncology segment.
I see. And I know they're really well known for their Cologuard product.
Oh, yeah, the at-home colon cancer test.
Exactly. So that would fall under their screening segment.
Yeah, that's right. And then their screening segment also includes prevention genetics.
Which, what does that focus on?
So prevention genetics is all about testing for hereditary conditions.
Interesting. So it sounds like they're covering a pretty broad spectrum within healthcare.
They are, and they're really tapping into a market that's experiencing massive growth right now.
You're talking about the cancer diagnostics market.
Exactly. With an aging population, advancements in technology like liquid biopsies and the increasing focus on personalized medicine, this sector is booming.
Yeah, that makes a lot of sense. So their precision oncology segment must be right in the sweet spot then.
It is. They have Oncotype DX, which analyzes the genes in cancer cells
To do what?
to predict the likelihood of the cancer coming back and to help guide treatment decisions.
So they're using genetic information to personalize treatment.
Exactly. It's all about tailoring treatments to the individual patient.
That's pretty amazing when you think about it.
It is. It's really revolutionizing how we approach cancer care.
Okay, so we've established that they're operating in a growing market and focusing on cutting-edge technology. But what about the people behind the company?
Ah, yes, the management team.
Who's steering this ship?
Well, the CEO is Kevin Conroy. He's been at the helm since 2009.
Okay, so he's been there for a while.
He has, and he's got a pretty hefty compensation package, too.
Oh, yeah. How much are we talking?
$16.12 million per year.
Wow, that's not bad for a year's work.
Not bad at all.
So the rest of the management team, what's their tenure look like?
The average tenure for the management team is 4 years, and for the board members, it's a little over 5.
Okay, so that suggests some stability at the top, which is usually a good sign.
It is. Investors like to see that kind of consistency in leadership.
Yeah, especially someone like Warren Buffett. I know he's a big believer in strong and stable management teams.
Right. He looks for companies that have a clear vision and a proven track record.
Speaking of Buffett, wouldn't he be interested to see that Conroy actually bought almost 20,000 shares back in November of 2024?
Yeah, that's a good point. When a CEO invests their own money in the company, it can be seen as a vote of confidence.
Exactly. So that's a plus in the Buffett column.
But there's another side to that coin,
Oh, is there?
Brian Burnick, the executive VP, he sold off some of his shares back in August.
So some insider buying and some insider selling. That's always interesting.
It is. It always raises questions about what's going on behind the scenes.
Makes you wonder if they know something we don't.
Exactly. That's why it's important to look at all the information and not just focus on one piece of the puzzle.
Okay, fair enough. So let's shift gears a bit and
Yeah.
talk about their financials.
Sure.
Their revenue looks pretty impressive. They went from $2.5 billion in 2023 to a preliminary $2.76 billion in 2024.
Yeah, Cologuard is definitely a big driver of that growth, but their other products are also contributing.
So they're not just a one-trick pony.
Definitely not. They have a diversified product portfolio, which is important for long-term sustainability.
But the big elephant in the room is profitability, right? They're not profitable yet.
That's true, but there are some encouraging signs.
Like what?
Well, their adjusted EBITDA margin jumped to 14% in the third quarter of 2024. That's a 500 basis point increase.
Wow, that's a significant jump.
It is, and they've also been generating positive free cash flow lately.
So they're moving in the right direction.
They are, but that lack of profitability is still a concern for some investors.
For sure, especially if we're trying to assess whether this would be a Buffett-worthy investment.
Right. Buffett is all about investing in companies that are already profitable and have a strong track record of earnings.
So how does this all factor into their overall financial health?
Well, analysts are predicting they'll finally hit profitability in 2026 with a projected profit of $60 million.
Okay, so not too far off.
But there's a catch. They have a significant amount of debt.
Oh, that's never a good sign.
Not ideal, especially for a company that's not yet profitable.
And I'm guessing that's something Buffett would be wary of as well.
Definitely. He's famous for his aversion to debt. He prefers companies with strong balance sheets and plenty of cash on hand.
So is Exact Sciences' moat wide enough to overcome that debt? You know what I mean?
That's the million-dollar question.
Yeah, we need to really dig into whether their current performance and future prospects justify that debt burden.
Exactly. And that's where things start to get really interesting.
All right, so we've got a good understanding of what Exact Sciences does, who's running the show, and a glimpse into their financials.
Yep, we've covered a lot of ground.
But there's still so much more to uncover.
Absolutely. We need to understand how the market perceives Exact Sciences, who owns the stock, and what the risks and opportunities are.
So stay tuned, folks, and don't forget to check out the show notes for links to all the sources we're using.
All the information is right there at your fingertips. All right, so picking up where we left off, let's see how the market's feeling about Exact Sciences.
Yeah. What's the overall sentiment?
Well, they've got a market cap of $10.26 billion
Okay.
and a price-to-sales ratio of 3.77.
Right.
Analysts have set an average price target of $72.63.
Which implies what?
A potential upside of over 32%.
Wow, so analysts are pretty bullish on XAC.
Yeah, there's definitely a lot of optimism surrounding the company.
I'm guessing Cologuard's success is a big part of that, right?
Absolutely. Cologuard has become a household name, and that kind of brand recognition is incredibly valuable.
Makes sense. So the bulls are charging ahead, but are there any bears lurking in the shadows?
Oh, there are always bears, you know.
Of course, what are they growling about?
Well, the main concern is still that path to profitability.
Right, they're not in the black yet.
Exactly. And some investors are worried about how long it might take for them to actually turn a profit.
And is that a valid concern?
It's definitely something to consider, you know?
Yeah.
When you compare EXAS valuation to a competitor like Omnicell, which has a lower price-to-sales ratio,
Okay.
it does make you wonder if the market is getting a little ahead of itself.
Interesting. So it's a bit of a mixed bag then.
It is. There's a lot of potential, but also some risk.
Okay, so let's talk about who actually owns a piece of this pie.
Yeah, the ownership structure.
What does that look like?
Well, the majority of the stock is held by institutional investors, almost 61%.
Wow, so the big players are definitely in on this.
Insiders own just over 1%,
Okay.
which leaves about 38% for us regular folks.
So there's still plenty of room for individual investors.
There is, but it's interesting to note that there's been more insider selling than buying in the past 12 months.
Really? Is that something we should be worried about?
It's definitely something to keep an eye on.
Yeah.
You know, insider activity can sometimes provide clues about the company's future prospects.
Makes you wonder what they know that we don't.
Right. But it's also important to remember that insider selling can happen for a variety of reasons.
Okay, so it's not necessarily a red flag.
Exactly. It's just one piece of the puzzle.
All right, so we've talked about market sentiment and ownership structure.
Yep.
But I think it's time to do a deeper dive into the risks and opportunities here.
Agreed. A SWOT analysis should give us a good overview.
Exactly. What are XAC's strengths?
Well, their brand recognition is definitely a major strength.
Thanks to Cologuard.
Exactly. They were the first to market with an at-home stool-based DNA test for colon cancer.
Which is huge.
It is, and it's non-invasive, which is a big plus for patients.
Yeah, no one wants to go through an invasive procedure if they don't have to.
Right. And in addition to Cologuard, they have a growing product portfolio.
Oh, yeah, I almost forgot about that.
And they have an experienced leadership team.
Okay, so a solid foundation, but what about the weaknesses?
Well, that lack of profitability is still a major concern.
For sure.
And they're pretty reliant on Cologuard for revenue.
So if something were to happen to Cologuard, that would be a big blow.
It would, and we can't forget about those high bet levels we talked about earlier.
Right, those are some serious challenges.
They are, but every company has weaknesses.
That's true. What about the opportunities, though? Where's the potential for growth?
Oh, there are definitely some exciting opportunities out there.
Like what?
Well, the cancer diagnostics market is expanding rapidly.
And XS is well-positioned to capitalize on that.
Exactly, and they have new product launches in the pipeline.
Such as?
Cologuard plus Oncodetect and CancerGuard, just to name a few.
And those could be game changers.
They could be, and then there's the potential for international expansion.
Tapping into new markets around the world.
Right, and they could also explore strategic acquisitions to strengthen their market position.
Okay, so lots of potential avenues for growth.
There are, but we also need to consider the threats.
What kind of threats are we talking about?
Well, competition is fierce, especially in the liquid biopsy field.
Right. There are some big players out there.
And the healthcare industry is constantly evolving.
So keeping up with the pace of change is crucial.
It is, and the uncertainty of healthcare policies and reimbursement rates is always a wild card.
Yeah, those factors can have a major impact on a company's bottom line.
Absolutely. So there are both opportunities and threats to consider.
So for our listener who's thinking about investing in EXAS, what's your final advice?
I'd say do your research.
Of course, always do your research.
Read the company reports, look at their financials, talk to other investors, maybe even consult with a financial advisor.
Couldn't agree more. It's important to get a well-rounded perspective.
And don't forget to check out the Stock Analytics AI YouTube channel.
Oh, yeah, that's a great resource.
They have tons of in-depth analysis and AI-driven insights on Exact Sciences and other companies.
The treasure trove of information for investors.
Definitely.
All right, well, before we wrap things up, I have one final question for you.
Okay, shoot.
With all these advancements in personalized medicine and AI, what do you think the future holds for companies like Exact Sciences?
That's a really interesting question. I think the potential is huge.
In what way?
Well, imagine a future where cancer screening is routine and accurate.
And accessible to everyone.
Exactly, and where treatments are tailored to each patient's unique genetic makeup.
Wow, that would be incredible.
Companies like Exact Sciences are at the forefront of this revolution.
So it's definitely a space worth watching.
Absolutely.
Well, I think that's a great note to end on.
I agree.
So for our listeners out there, be sure to share your thoughts and stock suggestions in the comments below.
We love to hear from you.
And of course, always remember to invest responsibly.
Past performance is not indicative of future results, and you should never invest more than you can afford to lose.
Words to live by.
For sure.
All right, that's it for today's deep dive.
Thanks for joining us.
And we'll see you next time.